everyone, good evening. You're watching The Money Show and I'm Kavita Thapliyal, the show that puts your money matters front and center in a world full of financial noise. We are here to bring clarity. Good evening and welcome to The Money Show. I'm Kavita Thapliyal and this is the show that puts your money matters front and center in a world full of financial noise. We are here to bring you clarity, confidence and control over your personal finances, whether you're planning for retirement, building a portfolio, navigating debt, or just trying to make smarter money decisions. This is your space, your guide, and your weekly check-in with your wallet. Every evening, we bring you insights from top financial experts, decode the latest trends, and answer your burning questions on saving, investing, spending, and everything in between. Because here on The Money Show, we believe one thing: you don't have to be a finance expert to take charge of your money. You just need the right advice. So let's dive right in. And this is also a show where we put spotlight on your portfolio query, just in case you want to ask any question about your investments or maybe align your existing investments to your financial goals. All you have to do is just send across your questions on our WhatsApp number that's flashing on the screen, and also email ID where you can send across all your current investment details, and we will help you align your investments with your financial goals. So let's begin the show. We have Samir Shah as a guest and advisor who will be helping you across all your portfolio queries. Hi, good evening. Welcome to the show, Samir. And let's begin. This is the question coming in from Mr. Akhil Sharma. And he's been investing since last 5 years. He wants to accumulate 4 CR in 15 years, and he wants to have a secure financial life, or maybe achieve, financial freedom by the age of 45. So that's the aim in mind, and which is why he's investing. And so far, he's accumulated almost 9 lakh rupees. He's been doing SIPs and is also planning to step it up by 20% every year. Monthly SIP is 26,000, and he has Parag Parikh Flexi Cap 6,000 rupees investing, Access Long Term Equity, ICICI Pru Blue Chip, Nippon India Small Cap. He also has SBI Mid Cap and Tata Large and Mid Cap as well. And so he has analyzed his portfolio, and he's also taken up a step up of 20% every year. And so that is what is the portfolio like. He is also saying that he comes from that old tax regime. He's a taxpayer in the old tax regime. And so the fund selection as per the goal is aligned or not, and is the SIP amount enough for him to accumulate 4 CR in 15 years?
Good evening, Kavita ji. Thank you so much for having me in on your show. Akhil ji, let me start with your first aim of accumulating 4 crore. Your current portfolio valuation is approximately 9 lakh rupees. Monthly SIP you are doing is 26,000, and you are willing to increase your SIP by 20% every year. And you are willing to invest for 15 years. If we assume that if your return will generate, your investment will generate around 12% annual return, in that situation, your estimated corpus after 15 years would be around 4 crore 12 lakh. So you are very well on your track. But the first thing which you have to keep in mind is the consistency. Maximum time whenever we interact with the investors, they take first step of starting their investment, but in between they miss the consistency, which means they stop their SIP, or due to market condition they reduce the number of SIP, or they redeem the investment amount. So here the key of success is to remain invested irrespective of market fluctuation. Now about your portfolio, the what we what I have according to us, just there are one suggestion. First, there are approximately 7 scheme in your portfolio. We generally recommend that when you are investing only 26,000 rupees, ideally you should have 4 to 5 scheme in your scheme. At looking at your current investment spread, I would recommend at least you can stop Tata large and mid cap fund where you are doing 2,000 rupees SIP. Since you already have separate large cap and mid cap fund in your portfolio, I would recommend, we would advise that consider merging this fund along with your existing flexi cap fund for better consolidation. So overall, your scheme selection is good. wishing you very all the best for your journey. Just keep in mind that you should not, market for fluctuation should not impact your decision.
All right. One thing that's very important to even note in his question is the aim of having financial stability and financial freedom. Can one really aim, achieving financial freedom in mid 40s? Is that even possible?
If somebody has started investing well in advance, and if he has planned really well, all the financial goal which is coming, which he is expecting to occur over a period of time. If person has invested or if he has created a portfolio accordingly, then they can easily achieve a retirement financial freedom around 45. Financial freedom, Kavita ji, here what we believe is no, it is not about retiring from your job. What we believe is no, you can still pursue your career, or you can still keep earning, but without having that worry that in case if my regular income will get stopped, in that situation, how I will run my business, or how I will run my household. So financial freedom is all about worry freeing life, rather than uh, say these days you lot of people are having stress in their job, a lot of people are losing their job. In this situation, if person has accumulated a sizable amount which can which can help him to support rest of the life, then this can be easily achievable. It is all about the key of this is you have to start investing as early as you can. Say if you have started earning at 22, you should definitely start create a separate bucket for retirement. And in 20 15 20 years, you can easily accumulate uh, the right amount for your invest for your rest of life, which can self that amount can that amount can help you to sustain for rest of your life.
Perfect. Yes, definitely. Planning and early planning is what is really needed. But then let's move on. Let's take Rahul Kumar's question. He says that he's 44 years old and his goal is retirement fund of 3 CR and wants to retire in next 10 years. He's 44 now, 55 is the target for him. And he can invest 55,000 per month and he wants to invest in mutual funds via SIP. Rahul, thank you so much for sending us your question. And even though you're 44 years old, but then yes, a great start towards your retirement and 55,000 you want to start off with. Let's just first analyze. Whether this amount is enough. Samir, how would you like to calculate? And we really don't know the other elements of his retirement in terms of financial responsibilities and liabilities. But, assuming that all of it is clear and 3 CR is something that he's willing to accumulate only from this portfolio without having any financial responsibilities, is 55,000 the right amount in next 10 years to accumulate 3 CR?
So I must say that Mr. Rahul has a set little aggressive target, but it is easily achievable. See, with the willingness of starting SIP with amount 55,000 rupees, if we assume that this will generate around 12% average return, in 11 years time he'll be able to accumulate around 1.5 CR, whereas which will be a little little away from his expected collection goal, financial goal. So here he can achieve there are two options which or two ways which he can at least adopt, so he can achieve his financial goal. So first step is either if he can annually increase his SIP amount by 17% every year. This situation, this option can also help him to achieve the goal of 3 crore. Or else, say the time 11 years is little short time, so either he can increase his time and take it to 16 years. These are the two ways. Either he has to choose either of them to achieve his target, because initially he said no, he is willing to start SIP by 55,000 rupees only. So I'm not recommending no, the other option that he should increase the SIP and take it to 75,000. So these are the two ways which he can adopt. Now, for achieving his financial freedom, or as he is planning to accumulate this amount for his retirement, so I have a no, we are proposing following funds to start with. First is he should have one flexi cap fund, that is Parag Parekh flexi cap fund, where he should invest 15,000 rupees. Another is Mirai Asset Large and Mid Cap Fund, where he can invest around 12,000 rupees SIP. Third fund is HDFC Mid Cap Fund. There he can there he can do 10,000 rupees SIP. Uh, One, he should have a small cap fund. For that, we are suggesting Nippon India small cap fund. He can start with 8,000 rupees. And to provide a stability to his portfolio, we are recommending UTI Nifty 50 Index Fund. There he can do 10,000 rupees SIP. So this is how we can construct the portfolio. This portfolio is well balanced. In this portfolio, we try to cover all the aspect of equity investment. So one is passive fund, four are diversified equity fund, and to add the element of growth, we have recommend mid cap and small cap fund also.
All right, so that's the amount that one needs to be taken care of. And also, yes, you're going slightly aggressive, Rahul. So it's important to get the facts right and implement your strategy accordingly. If you can just increase your time horizon, that would be a great thing to do. Otherwise, what you have to do is just increase your investment amount to achieve that goal. And also, maybe you just want to, check back if 3 CR is enough for your retirement, just in case you have any financial responsibilities even after 55. But then let's move on, Samir. The next question is coming in from Prasoon. Prasoon Gamit. He's 42 years old, and he's got SBI Banking and Financial Services Fund 10,000. He's been investing since last 4 years. ICICI Pru Transport Logistics again 10,000 since last 3 years. Parag Parekh Flexi Cap investment started a year back, almost 10,000. Motilal Oswal Mid Cap 10,000 again. SBI Small Cap. Current portfolio amount is 10 lakh rupees. His target is 5 CR in 15 to 18 years. Can he exit from thematic fund, SBI Banking and Finance, and even the ICICI Pru Transport Logistics Supply, or he can continue? Is the first question that he wants an answer on, and any changes in the portfolio that you might want to recommend. So interesting, and thank you so much for asking that question, because in any case, I think that would have come as an advice from Samir. So Samir, what do you have to say? An exit from the thematic funds?
Certainly, Prasanji, our suggestion is like, no, as you are accumulating this fund for your retirement purpose, having a thematic fund in your portfolio, it is too risky, because this money you are saving for your uh, retirement need, right? Second thing which we have to understand is generally thematic fund we use to capture the market movement, not for the long-term investment purpose. So here our recommendation is to exit from ICICI Prudential Transport Fund. And why we are recommending SBI Banking Fund? Because you already have a flexi cap, a small cap, and flexi cap and large cap fund in your portfolio. So having SBI Banking Fund, it is like, no, you are taking you are taking a high exposure into banking sector, because flexi cap as well as large cap funds also have sizable exposure in the banking sector. So that is the reason why we are recommending to exit both the thematic fund. And your new structure, like, no, your new portfolio structure would be like, say you are currently doing SIP in Parag Parekh Flexi Cap Fund. Your current SIP amount is 10,000, where we are like, no, here we are suggesting to increase the SIP amount from 10,000 to 15,000. Second, you have invested into Motilal Oswal Midcap Fund. Please continue doing that. There is no need to make any changes in midcap as well as small cap fund. Two funds which we are recommend to add to your portfolio. First is Mirai Asset Large and Midcap Fund, because it will this fund will provide a stability to your portfolio. Here you can do SIP of 10,000, and another fund is UTI Nifty 50 Index Fund. You can add 10,000 rupees SIP here. Now, let's talk about your aim of accumulating 5 crore. Currently, you are doing SIP of 50,000 rupees, and your current portfolio valuation is 10,000 rupees. let's assume that your portfolio generated around 12% annual return in 15 years time. If we assume that you are keeping your fund investment for 15 years, your accumulated amount would be 3.2 crore. And in case if you are continuing with your investment for 18 years, in that situation, your accumulated amount would be around 4.7 CR, which is pretty close to your financial goal. Now, to achieve exact 5 crore amount, you can do you can increase your SIP amount by 3% every year. That can also help you to reach your goal. Alternatively, if you wanted, if you are not willing to do 3% every year, in that situation, you can increase your amount, SIP amount from 50,000 to 55,000. In both the option, if you select according to your preferences, both the option can lead you to the target which you have set for yourself.
You know, one thing is very true about the questions that we are getting today, Samir, is that people are aligned with their financial goal in the sense they know how much they want to accumulate. Maybe it's just a strategy that, you know, they are needing advice or recommendation on. But having said that, a longer time frame to accumulate so much of corpus is something that's been understood by the investors. So I think that's something we should really appreciate. And having said that, what exactly that level in the portfolio when one should be adding a sectoral or a thematic addition or a fund in the portfolio?
So ideally, first we have to understand the financial goal. If it is long-term financial goal like retirement and all, we generally recommend not to take exposure in sectorial fund, because sectorial funds requires a lot of attention in terms of the investor should have a detailed understanding about that particular sector. He should monitor and closely watch sector, whatever is happening, whether it is good or bad. He should be he should have fair bit of understanding about that sector. Say suppose somebody has invested into pharma sector, and just because of XYZ reason, the it see some events may have a positive impact on that sector, and some event has negative impact on the particular sector. So generally we suggest thematic or sectorial fund, they should invest to time the to take the advantage of in that particular sector. So example, if somebody is expecting good news for any particular sector, in that situation he should invest, and the moment that news and the effect of that news get adjusted, he should exit from that particular sectorial fund. So ideally, the amount he should have, the allocation from the portfolio should not be more than 8 to 10%, because it is it falls under a high risk category.
All right, very important. Let's move on. Let's take Raghavendra Pandey's question, our next viewer. He's 38 years old and he's got a couple of funds in his portfolio: Motilal Oswal Mid Cap, Small Cap of Nippon India, SBI Equity Long Term, and GM Flexi Cap. Total SIP is 6,700. He wants to step it up by 25% whenever he has done that, and he will be doing it again. Target is 15 years, and he's doing direct investments via Grow app. He wants to know what's the corpus that he can accumulate in 15 years with this investment amount and with the step up as well. So what's the good news for him?
So first of all, I would definitely congratulate Raghavendra ji, because since he has started his investment and he is willing to increase his SIP by 25% every year. So now there are certain facts which I would like to highlight here. Say suppose after 5 years, if he is willing to increase his SIP by 25% every year, after 5 years, monthly SIP amount would be around 16,300 rupees. After 10 years, this amount would be around 50,000 rupees per month. And after 15 years, the monthly SIP amount would be around 1,52,000. If we assume he will continue doing 25% step up, in that situation, after 15 years, he'll be able to accumulate around 1.35 crore. In case if he doesn't follow the 25% step up rule, in that situation, 6,500 rupees SIP average 12% return. In 15 years, he'll be able to accumulate around 33 lakh 50,000 rupees. So that is the first thing which I like know, which I wanted to highlight to Mr. Raghavendra ji. Second, like no, the portfolio wise, there is only one portfolio where like no, we would make like no, our recommendation is first is uh, he has invested 1,000 rupees SIP in JM FlexiCap. Here, our suggestion is like, no, if we can switch this from JM FlexiCap to HDFC FlexiCap or Parag Parekh FlexiCap, any like no whatever he feels comfortable. But our suggestion is instead of JM, he can invest his SIP into any of this. Another is he has invested in SBI long-term equity, where he can reduce or exit from that fund and increase his exposure into Parag Parekh FlexiCap fund. Why? Because if he has opted a new tax regime in that situation, SBI a long-term tax saver fund, it is a pure that fall into ELSS category. I would like no, we would suggest like instead of investing into ELSS fund, he can switch from ELSS to any FlexiCap fund. That is first recommendation. If he has like no, if he have decided to move from old regime to new regime, otherwise he can continue investing into SBI long-term capital.
All right, so these are changes that one is recommended and should be doing. But then having said that, one more question that's coming in my mind after looking at Raghavendra's question. Is it really good to start investing and not have a corpus in mind? Ideally, everything should be going hand in hand, but why is it important to know how much you want to accumulate and then later on, start your investments basis that? Because on what basis can also one align the corpus with the current investments that's going on?
Kavita ji, you have rightly strike the chord. Say generally, if you aim nothing, you will hit every time. So this is the general saying which whenever we meet any customer, first is first. Says generally when you start your investment, first thing you have to do is you have to set a goal for what you wanted to accumulate fund. That is the first step. Second, for to achieve that goal, what amount is required? That is the second step. And based on that, like what amount and for what you are accumulating. Once you are clear with that, then you have to do the bulk calculation to achieve that goal. How much I have to invest in? How much I have to invest? So first is ideally this is not the right approach to start investment. But as I guess he has already started investing in and he has uh, invested into a couple of schemes also. Our suggestion is always like first you decide this is not the right approach to start your investment. First you decide for what you are investing and how much it is needed, and to achieve that what time is required and how much you are willing to invest. This is the standard process to start your investment.
I think with that, it's a wrap. And thank you so much, Samir, for participating today and helping our viewers navigate through their investments and their financial goals. And for our viewers, I'm going to leave you with our WhatsApp number and email ID where you can keep sending us your questions. See you tomorrow. Goodbye.